Hi there. You might have recently read in the press that tempers are running a bit hot on the repeal of Section 45 of the Income Tax Act, the corporate restructure rule that allows for the intergroup transfer of assets without income tax or capital gains tax being levied. You may have read that SARS want this repealed with immediate effect because there's been widespread abuse of the provision. And others are saying SARS has to give due notice, they have to consult. There are a lot of deals where people are leading to disappointment. And there is a lot of risk for CAs who are proposing deals who don't even know about what is going through Parliament at the moment. This is the fullest story that I can do about it in the scope of 10 minutes.
In February every year, you have Budget Day. And that's when the Minister of Finance announces more or less what is going to happen during the year. This is followed by the Draft Taxation Laws Amendment Bill being released, in this case this year on 3 June. Then, later in June, we have the public hearings before the Standing Committee of Finance to get public participation as to what they think of the bill. And that's where the friction's coming at the moment. This is followed by a report back from SARS and then the final bill in about September, October, which becomes an act by November. Now, what Section 45 will tell you is that you can take a holding company, and if it has a subsidiary, it could be a 100% subsidiary, so long as it's greater than a 70% subsidiary, that's okay. Then you may move assets between holding company and subsidiary at will, and you will not incur any taxes. And you can do that also with a 70% subsidiary. In fact, you can do it between co-subsidiaries. No problem there at all. In the context of Black economic empowerment, Section 45 has enormous benefits because you can do this. You have a company with its business. The company can then form a 70% held subsidiary with a 30% BEE partner. The business of the company can then be sold to the subsidiary without any taxes, thereby bringing a 30% BEE component to the subsidiary. The purchase consideration for the going concern remaining outstanding by way of loan account. And that is a very important feature of the Tax Act when coupled with BEE. There are no capital gains considerations, no recoupments, and very importantly for the incoming BEE partner, there is no cash requirement. There are other Section 45 type transactions where we get the use of external debt, where we get a company with its business that forms a 100% held subsidiary, and that then takes over the business, establishes the loan, but then a bank takes over the loan and we get a tax-deductible interest stream paid to the bank, and then the bank repays the holding company, thereby releasing value from the group and incurring tax-deductible debt for the future. That's what's worrying SARS primarily. SARS are not happy with this, and there's been a great increase in the volume of Section 45 transactions in recent months, and SARS and National Treasury are saying that this is a substantial threat to the fiscus. They say a lot of these are put together with purely a tax-driven motive only, and National Treasury needs 18 months to reconsider the intergroup relief in the reconstruction provisions. So the proposal is to, with immediate effect, repeal Section 45 and take it out of the Act. The great controversy is that in the draft legislation, they are saying that once Section 45 has been repealed, it will be repealed with effect from all deals on or after 3 June 2011. i.e. it is given immediate effect before even the public hearings have taken place or any report back has been taken from SARS, or there has been a bill or there has been an act. And the question from the tax profession is this necessary? is this not an incredibly drastic measure, as it's throwing the baby out with the bathwater and stopping all inter-subsidiary holding company transactions? And that's very important in a country that does not have a group tax alternative. They say that SARS and National Treasury have offered no alternatives, and that there should be alternatives for the interests of certainty, fairness, and reasonableness. And then they ask, what about existing deals? For example, Mustek, for example, Palabora Mining, where literally billions are at stake on deals that are already in process. Now this just leaves them with the prospect of abandon and write it all off, with everybody being disappointed, delay, and then if the legislation is delayed, well, you'll get caught up in it anyway, or proceed in hope and at risk that Parliament is not going to accept this. These are not very nice alternatives, are they? Another argument is that in the recent judgment of SAICA versus NWK, Lewis looked at transactions which are put together solely with the intention of obtaining a tax advantage, and said that the tests should go further and require an examination of the commercial sense of a transaction, or of its real substance and purpose, and that if the purpose of a transaction is only to achieve an object that allows the evasion of tax or a preemptory law, then it should be regarded as simulated and thrown out. So what the counter-argument to SARS is, go and do your job. You've got the Lewis judgment, you've got the GAR provisions of Section 80. Go out and catch the offenders and discipline them. Don't just come through and try and push retrospective legislation into effect. I think things are getting a little bit too personal in this matter. What we have got to realize is that in all tax matters, we have the taxpayer and SARS and National Treasury on opposite sides of a spectrum. And everybody is pulling in the opposite direction all the time. But the stakes in this thing are incredibly high, because we are looking at SARS wanting the immediate implementation of the repeal of Section 45. Whereas what the taxpayer is actually arguing is, no, wait, this 3 June, that's rubbish. SARS must go away completely. They've missed their flush at the legislation for this year, so they must come back again next year, propose it in the draft bill, and then only bring it into effect when next year's Income Tax Act is actually promulgated. And that would be at the end of 2012. So that's a long way off. Perhaps what we should be saying is 3 June is a little bit butch on the side of SARS. Perhaps SARS should be, National Treasury should be saying, on effective from the date of promulgation of the Act in November this year, Section 45 will be repealed for 1 year, and that replacement legislation will be implemented during 2012.
SARS, National Treasury and the taxpayer have to find some common ground on this. I'm not too happy about legislation being pushed through on the 3rd of June with no due notice. On the other hand, any thought of putting off an amendment until November next year and incurring a loss of revenue to the fiscus for a period of 18 months because of a technicality is also, to me, untenable. They've got to find some common ground. I reckon we've got to get together and say, this amendment comes in from promulgation date, i.e. round about November this year. The deals that are on the table stay on the table and get concluded by November this year. And then there is a 1-year period where SARS and National Treasury can go away, do their homework, and come back with a revised Section 45 that allows for the intergroup transfer of assets, that allows for the BEE transactions to still take place because that's such an important agenda, but that stamps out the alleged tax abuses that are currently taking place. The Parliament has to decide, are they going to allow practices to continue that threaten the tax base, or are they going to bring in an immediate stop to it by bringing in retrospective legislation? We wish them luck with that consideration.